Hello traders, this is Faraz Akhzada, market analyst for City Index. Today is the 26th of November. So the markets are looking quite interesting. As you can see, the dollar CAD rallied sharply overnight after Donald Trump warned that he will impose 25% tariff on exports coming into the US from Canada and from Mexico as well. In addition to that, he also warned of more tariffs on Chinese exports. But he made no mention of eurozone, and for that reason, we've seen the euro stage a recovery. But it is coming off its earlier highs and is trading within this grey shaded area where the 105 level meets the October 2023 low at 104, just under 104.50 area. So this area is a pivotal zone. Previously, the market had staged a massive bounce from there in October of last year. And now that we've broken below it, the key question is, can we hold below this area or do we go back above? The bulls are certainly making an attempt to push rates back above this area because of technically oversold conditions and the fact that Trump made no mention of eurozone tariffs. But if the euro dollar cannot hold its own above this zone, I think that would be quite bearish. So for me, the line in the sand is at 104.15 area, the low from Thursday's range. If that area breaks, then we could well see the euro dollar go down and retest the recent lows at around 103.33 area and possibly head down to 103, 102 and potentially even lower. So a lot will now depend on this area, and if the euro dollar can rise back above the zone, then the next key area of resistance to watch is at around 106, which was the April low, and this area was previously tested and held last week. So a move back above that area would be a short-term bullish outcome, but then the euro will face further resistance levels ahead, such as 107, 107.70 should we get to those levels. But we'll cross that bridge if and when we get there. For now, the key area to watch is this zone right here. In the commodities space, we saw crude oil and gold prices fall sharply yesterday because of reports that there will be a ceasefire between Israel and Lebanon, and that caused oil prices to tumble below the $70 level. So this area is now going to be very important, and for as long as we hold below it, the path of least resistance on WTI remains to the downside. This area was previously support and resistance, and now that we've gone back below it, it's now offering some resistance. Now, if the selling pressure resumes from this area, then the next downside target could well be this area of support between 66.50 to 67, which has been tested on a number of occasions in recent times. But concerns about rising oil supply and weak demand could potentially push oil prices below this area, potentially leading to a drop below 65 in the days ahead. So this area needs to be monitored very closely now, and if oil prices hold below this zone, then that motion could start as early as today. But if we go back above this area on a daily closing basis, then that could pave the way for a run towards the recent range highs of around 72.50 to 72.80 area, this red shaded zone. Gold sold off quite sharply yesterday, forming this large bearish engulfing candle on the daily chart as prices found resistance from exactly where they should have, right? From this area right here. Now, if I zoom in at around that area, you can see that it was previously a key area of support that gave way when gold prices initially sold off on the election day. Now that prices have come back to retest this area, it has held as resistance, which is hardly surprising. So where do we go from here? Well, the key area of resistance to watch now is at 26.68, the low from Friday's range. That level is key. For as long as we remain below that area, the short-term path of least resistance is now going to be to the downside in light of this bearish signal that we received yesterday. But if we go back above 26.68 on a daily closing basis, then that would invalidate this bearish technical development. But concentrating on the downside, the next key level to watch, should the selling pressure resume, is at 25.80. The base of the previous breakout that happened in mid-November. That level is going to be very important, and so far as the short-term outlook is concerned. And if that level gives way, then we could see gold dip into this longer-term support area between 2,500 to 2,530. I've shaded this area in blue on this chart. As you can see, this area had been the prior breakout zone, and we haven't really retested this area from above after we broke above it in the second week of September. So that area remains exposed for a potential retest in the coming weeks. Much longer term, if the gold selling continues, then the 200-day moving average and the 2,400 support area will come into focus, but we'll cross that bridge if and when we get there. For now, these are the key levels to watch insofar as the short-term outlook is concerned. Now, for more market insights and analysis, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.